Now, analysts say Nigeria's economy could be headed for a recession by the end of this year on the back of the massive decline in crude prices caused by the coronavirus pandemic. Now, Danilola Akinbami, she's the head of research at Financial Derivatives, joins me on the line from Lagos to discuss this and more. Thank you so much for joining me on the show, Danilola. I would like to get your thoughts on how you see this impacting GDP growth going forward.
Okay, thank you. Right now, we all know what is happening due to the COVID-19, so the lockdown, the restrictions definitely has affected businesses and the way people are operating. So whatever projections that anyone is going to make right now is obviously going to be based on the impact of the COVID. And Q1 right now, with what we are looking at, most likely, if at all, is sharply lower GDP growth rate of maybe about 0.5% or even less. And bear in mind that typically in Q1, the growth rate is usually slower than previous quarters because of the lull in economic activities in January. And now that coupled with the severe impact of COVID is going to lead to output forecasts sharply lower.
All right, sharply lower output you're saying there, but then I just spoke to FITCH earlier today, and they're looking at the possibility of, currency possible currency devaluation happening in Nigeria as regarding the effects of the COVID-19. I'd like you to get your thoughts on this as well.
Okay, so my thoughts on, I didn't get that part, my thoughts on what exactly?
Yeah, your thoughts on how the COVID-19 could impact the currency in Nigeria.
Okay, the currency.
Yeah. Are we likely to see a devaluation or not?
Okay, so for the impact on the currency, right now there's literally little to no demand for Forex because we know that airlines have suspended their activities, schools have been shut down, the borders are closed, so there's very limited trading. So in terms of Forex demand, it's literally inexistent. And in terms of the supply, Nigeria receives significant amount of its Forex supply from all receipts, and we know what has happened to oil prices of late, trading below $30 per barrel. So right now, with what is happening, it's unlikely for any major occurrence or shift in the currency as at right now in the short term. But if this virus or pandemic extends to beyond, let's say beyond Q2, the CBN may have to intervene and adjust the currency. But right now, we know that the Naira has been trading flat at around 450 Naira to $1. And like I said, because there literally isn't any demand. But if that continues, then we might see increased or resurgence of the pressure on the currency and might trigger another adjustment.
All right, but do you see any likely monetary policy response in the near to medium term? And also, looking at the inflation figures, what's your call on how you see inflation playing out?
Well, the next monetary policy meeting is going to occur in May, and between now and then, we know that the CBN has come up with a lot of measures. At the last meeting in March, he left rates unchanged, citing the need to see the impact of what has been done so far on the economy. Again, like I said earlier, if there's no respite in sight, the CBN may be forced to actually come up with some measures or maybe even reduce the interest rate come its meeting in May. And we know that a lot of African countries, South Africa, Kenya, Angola, they've all cut their interest rates. Even developed economies have cut their interest rates just so that they can stimulate or boost the economy in this trying period. So definitely, if this pandemic extends beyond Q2, the CBN may be forced to adjust the stance on monetary policy and possibly reduce the monetary policy rate by about 50 to 100 basis points. And in terms of inflation, food prices have currently increased by over 30 to 40%. And now this is occurring at a situation where Nigeria is also moving to its planting season. And during the planting season, we know that there are usually shortages and traditionally prices should increase. So that coupled with a possible adjustment even in the exchange rate could lead to higher imported inflation. So definitely inflation numbers are going to keep increasing until there's a possible resolution.
All right, then thank you so much for your time on the show. I've been speaking to Danilola Akinbami. She's the head of research at Financial Derivatives.